heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York. Ed Ludlow is off. This is Bloomberg Technology. Coming up, insiders cash in on Nvidia's rally as the stock purchases and pushes deeper into record territory. Full chip coverage ahead. Plus, TikTok parent ByteDance embarks on a high-stakes bid to overturn the law requiring them to divest or be banned. Details to come. Meanwhile, Steve Cohen's Point72 looks to raise $1 billion for a new fund, picking winners and losers in AI. We'll discuss that and so much more throughout this hour. First, let's check in on these markets and look, a little bit of a temperature check going on when it comes to big tech. Mag 7, is there too much concentration risk? Is there a bit of profit taking happening on the day? Is there one too many bankruptcies being filed? We're just down about 0.1% at the moment when we're looking at the Nasdaq more broadly. However, the S&P 500 near or at record territory. And in fact, we're getting a little bit more risk appetite creeping back into Europe. Look at the stock 600. We're actually up 0.6% as we digest what is happening from a political risk perspective over in France. We push higher. We're looking at a 20-year yield just down 2 basis points as we anticipate a big sale of 20-year treasuries coming later today. We've also got a little bit of a digestion on what is happening from an economic front. Industrial production looking relatively sound as retail sales just pull back a little bit. A mixed picture in terms of where the Federal Reserve goes. Move on and look at what the individual stocks are doing. Because, look, we've got some key news out, Fisker being the key one in terms of bankruptcy news. We're up by 51%. Look, this is a penny stock. We've anticipated this move. Now we look for how they're going to be able to restructure or pay back their debt and indeed their creditors. We're seeing the stock really taking the hit. We are also looking at Micron, though, just on the up and up. It's your best performer on the Nasdaq 100. We're seeing it up more than 5%. Analyst Wedbush, for example, saying they only expect good news coming from Micron. Remember, their earnings come out later, June 26th. Nvidia as well, pushing higher up, almost 2%. Just the $3 trillion stock that just continues to give, and we are indeed seeing some of those insiders buying and selling, and we're most notably seeing some sales happening with executives offloading some of those shares. But we want to talk about the chip market. We want to look at how, well, maybe they're being impacted by geopolitical risks. It's a new story out by Bloomberg. A new bill is seeking to ban government-funded semiconductor plants from using Chinese-made equipment. Here is Bloomberg's Mackenzie Hawkins. Your new story just articulating how if you're going to be getting some subsidies from the US government, I'm afraid you cannot have China's technology within that.
That's right. So the U.S. passed this massive semiconductor subsidy program coming up on 2 years ago in August 2022. And the Biden administration is about 85% of the way through allocating some preliminary awards for the funding. That includes $8.5 billion in grants to Intel, more than $6 billion in grants to each of TSMC, Samsung, and Micron. And lawmakers are really heavily scrutinizing this program. There are already some guardrails on how companies that receive federal funding can proceed in China. They can't have significant expansions of their facilities there. But lawmakers are now looking at Chinese equipment that might wind up in U.S. facilities. And so this new bill that was just introduced this morning would seek to ban any companies that receive federal funding from buying Chinese tools for their U.S. factories.
How realistic is it that Intel, that TSMC are receiving, well, taking goods and equipment from China at the moment? There's also other countries listed in your story, Russia, North Korea, Iran, but really China's the one that we're most likely to see equipment come from.
That's right. So, I mean, every, semiconductor export control measure sort of targets a handful of foreign adversaries, but this really is about China. It's a great question. The U.S., Japan, and the Netherlands dominate the semiconductor equipment industry with companies like Lam, Applied Materials, ASML in the Netherlands, and Tokyo Electron in Japan. And Chinese equipment makers have taken a pretty significant hit over the past couple of years because of U.S.-led export controls on their ability to get high-end semiconductor manufacturing tools and the chips themselves. But they have made some significant progress, and they're actually beginning to pitch U.S. companies on using their tools. Some companies have been entertaining those early-stage conversations, we are told, perhaps more as a way to impose some pricing pressure on the U.S. firms that currently supply those fabs. But lawmakers see this as a growing threat, not just at the advanced edge, but also some tools that are designed to create more older generation chips.
We keep an eye on how geopolitics affects some of these technology companies and ones that are getting federal funding. Mackenzie Hawkins, it's a brilliant story. Thank you very much for bringing it to us. Meanwhile, though, look, chip stocks do continue to power higher today. You're looking at the stocks, for example, hitting new highs. We're looking at Micron outperforming on the day. Should you be allocating into tech right now when we're at such overbought levels? Eric Friedman is the man to ask, US Bank Asset Management CIO. And look, we do still have the odd headwind, whether it be geopolitical risk, whether it's happening in France, whether it's, of course, China, US, but it doesn't seem to be crimping the appetite of big tech at the moment, Eric.
Yeah, Caroline, I agree. It seems like this is the story that we're hearing consistently across not just corporate America, but also global companies, which is if you want to get bigger, stronger, faster, it's not so much a focus on labor, it's a focus on technology. And to your point, it has been really centered on chips and some of the larger integrated chip providers. So that's a space that we think is bought on weakness as opposed to sold at these levels. And part of that reason, Caroline, is the very consistent CapEx story that we're seeing. We have looked across the globe and companies that are not just in the technology industry, of course, but whether it's banks, whether it's healthcare providers, this push towards what AI and other big data services can provide, we think is an ongoing theme. So it's a space that we think that an investor, again, we're benchmark relative investors, we want to be at least neutral, if not overweight that space right now.
Don't fight the trend, basically. But sometimes momentum does come to a screeching halt, Eric. Is there a way of protecting yourself from the downside?
Yeah, I think it's a great point. I mean, one of the things that you did a great job in the prior segment was thinking about protectionism. And look, we've got a lot of data points coming up. We've got the July 4th, Sunak election. We've got the considerations around, of course, the U.S. Republican and Democratic national conventions, where we'll hopefully hear some more demonstrated policies regarding regulation and also on, more tech specifics, if you will. So I think it's a space where you can lighten up, but we would not lighten up beyond market weight. That's a space that, again, we continually think that trend is there. What are some things that could really cause that to go the other way? Again, geopolitical risk is one. Also, if we do see a creep higher in interest rates, which is not in our current forecast, but if we see not just the Fed, but other global central banks push off rate decreases, that's something that could also be an issue for valuations on these companies. But again, it's a market that has to be proven that it needs to be sold as opposed to be bought, which we think, again, it's still a good place to be for investors now.
Yeah, Eric, when you are sort of looking at the broader benchmarks and you're focusing your allocation as thus neutral or maybe a little bit overweight, at what point do you start to say, okay, we need to broaden? And do you even have to factor that in particularly when you're looking to diversify, when you're worried about concentration risk when it comes to the AI bet?
Yeah, it's critical as an asset allocator to think about the over concentration, if you will. Again, if you look at the complexion of the S&P 500, that does give us some concerns just about how overweight, if you will, on a normalized basis, some of that index is. But if you look across the pond, again, we're big believers in EFA as a long-term diversifier, but that's largely a value-oriented index. And so given that there is some participation in tech in Germany as well as in the Netherlands and space like that, and also to the point made earlier about Japan, there's a lot of feedstock implications of the chips back and forth from a political standpoint. It's not just the chip makers. It's obviously the designers. It's obviously some of the individual resins that go into the chip making process. So I think the point is that you want to be smart, I think, first and foremost about the OEMs. And then secondly, you want to think about the other parts of the ecosystem, which are still highly valued. We think places like Japan are decent allocations in this environment. But again, you can't get, I think, too bearish on the space right now, just given the backlog of demand that we think will still be there for some time.
Perfect perspective, global as well. Eric Friedman of the US Bank, we really appreciate your time today. Meanwhile, coming up, look, going into the AI trade, Steve Kearns, Point 72, raising a new fund to pick the winners and the losers of artificial intelligence. We're going to discuss that one next. Meanwhile, let's just keep an eye on what's happening with Apple. Interesting report coming from The Information. Apparently, they've halted work on the next high-end Vision Pro headset. We understand that at least one supplier that works on the next high-end Vision headset has been told to halt. This is coming from The Information. Currently down by 0.8%. Fewer features are going to be happening before the end of 2025. This is Bloomberg Technology. Time now for Talking Tech. First up, Fisker has filed for bankruptcy. The troubled EV maker is listing assets of between $500 million and $1 billion, and liabilities are between $100 million and $500 million in its bankruptcy petition. Now, the filing protects Fisker from creditors while it works out a plan to repay them. Plus, Best Buy, well, it's preparing for one of its biggest product launches of the year, AI computers. The retailer is training more than 30,000 employees to sell and repair PCs equipped with Microsoft's new Copilot AI. That goes on sale today. Best Buy says it has exclusive sales rights to more than 40% of Copilot PC models. And Huawei says it's considering cutting fees on an in-app purchases. That's through its mobile operating system. According to people familiar with the matter, the company is weighing a 20% commission for payments made via their mobile stores. Look, that undercuts Apple and Alphabet's 30% fees. Huawei has not yet made a final decision, and its plans could still change. Let's just talk about AI a little bit more, because Steve Cohen's Point72 is seeking to raise about $1 billion for a new stock-picking hedge fund focused on artificial intelligence. Story being broken by Hema Palmer, who joins us now. And tell us about this new fund. It's a big chunk of change, $1 billion.
It's a good chunk of change. And for a sector-specific fund, we haven't seen Point72 come out with a sector-specific hedge fund ever. And the sector they've chosen is AI, especially looking at semiconductors and hardware. And so, they're raising $1 billion for the fund, which is a pretty sizable fund. But keep in mind, the firm as a whole is $34 billion, so still not as big as the main hedge fund and some of the other things that they do.
But it's notable when we get a new fund, a first fund in more than a decade. Why is Steve Cohen pursuing this avenue? Because it's going to have long positions, but also short too.
Precisely. So he's quite bullish on AI. He thinks that it's going to be transformative, that it'll change the way companies work, how they make money, how much money they make. He thinks that the opportunity can be over the longer term, and so you might see big winners, you might see big losers. So there's long and short opportunities here, and he thinks that this is the best time to be investing. And so that it makes sense that he would launch this kind of a fund.
It's not just him making the investment decisions here.
No, exactly. He has a PM that's going to be focusing on the tech space. Steve will be overlooking and overseeing the firm and the fund. But what's interesting here is that this is a new hedge fund vehicle that they've decided to create for these investments. And typically, they have their main hedge fund that does investing in stocks, and they do macro trades, and it's more market neutral. This fund will be more flexible. It will be able to be a bit more long biased if they see opportunity. It will focus on that one space. And so, it's an interesting move that he chose to create a new vehicle for these investments versus just putting it in the main fund.
It's notable that also not been afraid to make bets when it comes to technology, but actually has used just his own money when it comes to the VC area. But there have been other areas that they've looked at technology to actually improve things, right, too?
Exactly, yes. So they have a venture investments, too. They have a unit that makes investments only for Steve's money. They have a separate unit that makes investments in venture and in private equity for outside capital. So you're seeing this firm that back in the day was just old school hedge funds, long, short, really push into new areas, going more into venture, going more into privates, pushing into macro as they've been expanding that unit, and now pushing into AI.
And using generative AI to improve some of the bets they make from a private equity perspective. Hema, it's a great story. It's really well read today. Thank you so much, Hema Palmer, on all things Point72. Time now for our weekly AI in Action segment. And today, we're looking at AI's impact on healthcare, and in particular, how it might even alleviate some of the burnout of nurses, help with the shortages there, based on new data from healthcare worker platform Incredible Health. Here for more is Iman Abuzaid, CEO, co-founder of Incredible Health. Look, we want to talk to you about how ultimately you're seeing a real worrying trend here. There's going to be a huge shortage of nurses. Can technology help in any way, Iman?
Absolutely. So in our most recent study, 90% of healthcare executives think the nursing shortage is going to worsen in future years. So the way we see the role of AI is that it can have an impact in increasing opportunities for nurses and other healthcare workers too. We've experienced it ourselves. Our platform is used by over 1 million U.S. nurses and by over 1,500 hospitals. And on Incredible Health, we've implemented AI features that have benefited these workers as well. So for example, we're now using AI in what we call our resume wizard, which enables nurses to create resumes using AI. And we enable hospitals to send out messages to nurses using generative AI, which has led to a 20% increase in interview requests being accepted.
So can totally see how it's making, ultimately, nurses accepting interview requests that much easier. Tell us a little bit about how healthcare providers, the hospitals that you work themselves, are perhaps using generative AI and might be able to alleviate some of the burnout, the stress, the work for the nurses they employ.
Absolutely. So in our recent study that's just published today, over half of healthcare leaders are exploring technologies that use artificial intelligence for nursing operations. Primarily, they're looking at using it for scheduling and administrative processes. We're seeing a lot less, less than 10% being using it for recommendations and patient care. And the reason that they're focused on this technology is because burnout is still the top reason why nurses are leaving the workforce and why they have such high turnover of over 20% annually in hospitals too. So it's an urgent issue to alleviate the workforce, and AI is a potential for doing that.
I can imagine that actually in years to come, generative AI and the way in which we interact with it might help with the mental health burdens that nurses feel too.
Absolutely. So, when there's several things that nurses are going through right now. First of all, they're very dissatisfied with the ratios of patients that they need to take care of. So they're taking care of more patients than usual. And the healthcare executives acknowledge that as well. They're also dissatisfied with the nurse-to-patient ratios at their hospitals. We're also seeing burnout and stress be the number one reason for turnover. And then finally, we're seeing an increase in workplace violence. So over the last year, there's been an increase in verbal and physical assault from patients or patients' families on nurses. And so for all these reasons, these are high priority topics that healthcare executives are trying to tackle with technology like AI, but also with other more traditional methods, right? Including salary increases, increasing flexible scheduling, and improving these nurse-to-patient ratios.
As a co-founder and CEO of Incredible Health, how quickly have you been able to increase the skill set of your own employees to adopt generative AI to basically make your product even better?
Yeah, so we have a fantastic product and engineering team here at Incredible Health, and since ChatGPT launched, they've been very excited to use that technology. And so yes, we do use GitHub. We use Copilot, for example, when writing code, and then we've also implemented AI in a whole range of features that benefits our users too. So we're big believers in that technology and the impact it can have on our users in a beneficial way, especially when it comes to expanding opportunities for healthcare workers.
You're headquartered, though, in San Francisco, where I'm sure the conversation every other second is around generative AI or AI. How is that differing with the global workforce that you employ or help employ within hospitals? How does it affect your own talent pool and how expensive it is?
Yeah, so look, as far as the actual Incredible Health marketplace itself, we have over 1 million U.S. nurses and 1,500 hospitals here in the U.S., so we operate pretty much in most of the country. And so we've actually seen the uptick in adoption of AI to be quite rapid throughout the entire country, certainly not just focused in the Bay Area. And then also we operate our company fully remote, and so have an engineering team and a product team that's spread across the country as well. And so we're really seeing the sort of adoption and interest in AI be national. It's widespread.
How do you use it, Iman, on a daily basis?
How do I personally use it?
Yeah.
Sure. I mean, I've used ChatGPT pretty consistently when it comes to improving written communications, whether it's to customers. It helps sort of edit some of my marketing copy as well. So I definitely have personally used it day to day at work too.
Don't we all? Thank you so much, Iman Abuzaid, CEO, co-founder of Incredible Health, just talking us through how generative AI might change the game for nurses going forward. Meanwhile, speaking of artificial intelligence, Nvidia insiders have sold shares worth more than $700 million this year alone as the stock continues to push deeper into record territory. Now, amid the unrelenting demand for its chips, company executives and directors have unloaded about 770,000 Nvidia shares so far. Now, that's the most in the first half of the year period since the first 6 months of 2023, when about 848,000 shares were sold, according to data compiled by Washington service. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets for you. Maybe a little bit of profit-taking coming in big tech at the moment. We're seeing also some mixed economic reports coming in the United States. Retail sales just slowing a little bit. Are we having a slight weakness in the consumer here in the United States? Even though industrial production did look better today, we're also anticipating what the Federal Reserve does. Many talk coming from the Fed saying, look, maybe just one and done in terms of rate cuts this year. We see the Nasdaq 100 off by about 0.2%. The Stock 600 over in Europe actually getting a bit of a reprieve. At the end of trading, we're up 0.2 percentage point as maybe we just digest what's happening in terms of political risk coming from France. Bitcoin, though, under pressure, off by almost 3%. Maybe that is more of a trying to rationalize where rate cuts do go for this year. If there's going to be fewer of them, maybe some risk assets just pair a little bit. Move on and have a look at what's happening in terms of individual movers at the moment. I'm looking at stocks. Look, the index overall doing incredibly well today. Chip companies, just think of Micron once again on the up and up. Wedbush saying that there's only good news likely to come from this particular company. I'm looking at, though, that what isn't performing well. EVs. Fisker files for bankruptcy. Look, we'd long awaited this. In fact, it's the second time that Henrik Fisker, of course, the man who had designed some real supercars, now sees once again another one of his companies having to file for bankruptcy, trying to protect itself from creditors. We're off by 48%, but it does drag other EV makers down. Tesla off by more than 2 percentage points today. Meanwhile, we're just going to flip gears and think about a privately held company that has been long in the headlights of regulation here in the US. I'm talking the Chinese company ByteDance, parent company of TikTok, of course, and it's entering a high-stakes bid to overturn the potential ban of its app imposed by US lawmakers. To talk us through how they are looking to do that is Jamie Tarabay joining us with more. And this is interesting because much of the moves made by US Congress was because they'd had some closed-door meetings that made them really worried about TikTok. Might we learn something on what those meetings talked about?
We've learned a couple of different things that some of the lawmakers have discussed, including the sort of the revelation that there was an overlap between people on the board of ByteDance and their connections with the Chinese Communist Party, something that the CEO of TikTok told hearings on the Hill that there simply was no connection with the Chinese Communist Party. There were certain elements and events that happened over the course of the last year that really took most of the lawmakers who were lukewarm on legislation from not voting for it to convincing them that that was the only means necessary. And that's one of the things that we are looking at in this piece.
So from what we understand, ByteDance itself, or indeed TikTok and executives, are basically pushing for more information to be divulged to the greater public. Thus far, they've sort of said, look, the risks cited by lawmakers are hypothetical.
Right, and it's very interesting because the lawmakers have said, look, the burden of proof is on TikTok itself. They're the ones who have to show that they're not a national security concern. There's plenty of evidence out there from not just with Congress and the things that have been sort of spoken about and reported in Congress, but there have been reports and research and findings done in other places around the world, in the Australian Parliament, for example, that have basically displayed the sort of national security concerns that the lawmakers have referred to. One of the things that is an issue, though, is if the DOJ decides to put forward information that might be classified, they would have to do that in a closed setting. Otherwise, if that information is going to be released to the public, or at least submitted publicly in a lawsuit in response to the lawsuit, it would need to be redacted in terms of making sure that elements like sourcing and methods of obtaining that information were not included in the details. But again, it's really the lawmakers have said this is an act of Congress. It's really up to TikTok to prove their case rather than the lawmakers and the government having to prove what TikTok is alleging about the sort of the speculative nature of the national security concerns.
Yeah, I can't imagine, and indeed, as quoted in your story, Paul Stephen, a University of Virginia law professor, saying, like, it's inconceivable that a court would force them to release anything, given it is such highly sensitive data taken by, well, indeed, looked at and found by the United States. But I'm interested in just the timing of all this. It feels as though we're getting this pace of discussion once again, because June 20th is when we need to hear from ByteDance, from TikTok.
That's right. In a matter of days, we're going to have, at least from TikTok, they're going to lay out their case entirely, as we know that they have said that the law was unconstitutional, that it impacts the freedom of speech of its 170 million users in the US. And as you said, the legal expert that we quoted in our story says that if that were really the case, it would be about every platform, not just TikTok, but there are other platforms, so freedom of speech is essentially protected. It's also worth noting that TikTok is funding the legal cases of several users who are also trying to challenge the legislation. So it's going to be a really interesting thing. But I think what's really important here is that TikTok has a global audience of over 1 billion users, and they're fighting incredibly hard to hang on to these 170 million users in the US. And I think that in and of itself is worth exploring.
Bloomberg's Jamie Tarabay, great to have you on the show. Thanks for breaking it all down when it comes to TikTok. Meanwhile, coming up, we're going to be joined by the CEO of Waabi, Raquel Urtasun, to talk about how a new funding round for the driverless trucking company is really shining a light on the technology they have and how quickly we could see automated trucks on the road. This is Bloomberg Technology. Waabi is a company working on applications of generative AI to the physical world. And today it's announced a huge raise of $200 million in an oversubscribed Series B round, led by Uber, by Khosla Ventures, and with participation from the likes of Nvidia, Volvo, a who's who of corporate VC. The new funding brings total investment in Waabi to more than $280 million. I'm pleased to say we're joined now by the co-founder and CEO, Raquel Urtasun. And we thank you so much for joining us, Raquel. And tell us about fully autonomous trucks by 2025. That feels really bold to me.
Yeah, it's bold, but at the same time, it's something that is the next milestone for the company. Where thanks to the generative AI technology, we are able to go so much faster and so much more capital efficient compared to the rest of the industry. Today we have trucks driving autonomously in Texas with a safety driver, really, really performant. And we are at the verge of really enabling level 4 deployment without a human. And this is a very exciting day for Waabi today.
So tell us about ultimately what the difference is that you have pioneered. I understand it's a single end-to-end AI system that basically has a human-like reasoning. Why is that so important for autonomous trucks?
Yeah, so I spent the last 2 decades really trying, inventing technology, AI technology, to bring this idea of a single AI system that is able to reason like a human does, so that it can really generalize to all the different situations that might happen on the road, because we will never be able to observe, everything prior to deployment. And this, reasoning abilities is remarkable in terms of adding an extra layer of safety compared to anything else that we have seen in the industry. So, one way to think about it is that, we have this system that can be works by perceiving the world, creating interpretable abstractions, and then uses those abstractions to reason about what is the best, from all the possibilities of the things that it can do, what is the best maneuver. And that's much safer, much more efficient than anything that we've seen before. And it's provably safe. So we have solved, the alignment problem in AI, which is very important to bring this technology to the physical world.
I mean, as you've mentioned, you've been basically at the forefront of AI and applications in the real world for 2 decades. You applied some of that know-how to Uber, and you're now already sort of working alongside Uber when it comes to trialing autonomous on the roads of Texas. And they're backing you in this particular fundraise as well. What gets you from trial, error, to actually it functioning by 2025? Does regulation have to change, Raquel?
So the regulatory framework, particularly in Texas, where we're going to launch, enable us to deploy this technology. And we are working with all the regulatory bodies, really on a day-to-day basis, so that they can understand our technology with the trust. And for the first time, we have the ability to really make a much more robust safety case compared to the rest of the industry, which is trying to crank up miles in order to have a way to prove safety. But those miles are not sufficient, right? If you look at the rate of events on highways, a severe injury will happen every 10 million miles. and death on the road is every 100 million miles orders of magnitude. So you need something different. And thanks to Wabi World, our generative AI simulator, for the first time we have a way to prove safety in a scientific, mathematical way, and that's something that the regulators really appreciate. As finally having the ability to really certify systems in a much better way than the industry is today. So they're very excited about what we are building, and as I said, we bring them alongside and build trust from day one.
So when everyone's trying to poke holes in Elon Musk's idea of robo-taxis coming in a year or so, at the August the 8th date, hot in many investors' minds, do you think that can be a reality? And ultimately, we can be seeing autonomous vehicles more broadly, whether it's trucking or cars or robo-taxis, by 2025?
I would say that we will see in the end-to-end other types of approaches that you see in the industry today for level 2, level 3, which is not fully autonomous systems. The problem with those approaches is that they are black box architectures. They are not interpretable. They are very difficult to validate and verify, and they require massive amount of data and compute to be trained. And it's not scalable either, like the previous generation of technology, AB 1.0, with the hand engineer approach. So we need something better, and that's what we have with Wabi, this new generation of foundational models that they are really purposely built for the physical world, so that you can really deploy safely this technology in a way that has superhuman capabilities. So we would see, in the next, months, years to come. But what is very clear is that self-driving is going to happen, and the scaling will happen first in trucking. That's why, this is our first use case. But Wabi is going to do so much more than just self-driving trucks. So humanoids, warehouse robotics, all those different use cases would be something that we will target in the future.
Well, you've got that big infusion of strategic capital to get you there. Raquel Urtasun, thank you so much for talking us through what Wabi's got in store for us. Meanwhile, let's stay in the world of promising AI applications and where startups are getting involved, because Redpoint Ventures just unveiled its second annual Infrared 100. It's a comprehensive list of the next 100 promising private companies in cloud infrastructure. Guess what? AI has a big role to play. Erica Brescia is with us, Managing Director at Redpoint. And just dig through some of the companies here. What are the broad trends of the opportunities for startups looking to galvanize AI right now?
Well, I think, what we're seeing is that AI is permeating every aspect of our lives already, and this is really just day zero. And if you look across these companies and at their growth trajectories, what you're seeing is that we're seeing incredibly, almost unprecedented levels of growth as people harness the trend and the demand in the market for AI. We're seeing revenue ramp more quickly than ever before. Companies like Modal that are helping companies put AI into production and build apps that run on top of it are able to grow incredibly quickly. And what's most exciting to me is this is just the beginning.
I think that's exactly it. For many, it's been, where is the value going to lie? For now, picks and shovels, infrastructure, the actual chips, the hardware that you need to build these large language models. But then you're saying it's companies that help you actually apply to build applications that are building a revenue. Where else are we starting to see startups build the next layer of opportunity?
Oh, across the board. There's a company, for example, called Norm.ai that's helping turn hundreds of thousands of regulatory rules into automated AI compliance agents that can help financial institutions better comply with the regulations in place. And the work is so insurmountable that you couldn't do it before without AI. So yes, of course, it starts with the picks and shovels, but we're already seeing AI start to move up the application stack into categories like compliance, insurance, financial services.
Are there already too many startups? I mean, we had Clem DeLong over at Hugging Face saying, look, I'm getting calls 10 more than a week of companies needing to sell themselves to me because they cannot keep going, they can't keep growing, they don't have the money.
That's absolutely the case. Whenever you have such an incredible platform shift like this, there are a lot of venture dollars that go into it, a lot of optimism. There's a Cambrian explosion of companies. And obviously that's not sustainable, but this is also part of a healthy ecosystem, right? We have all these brilliant founders that are coming out of existing, incumbent companies to try to build something new, and they won't all be successful, but we learn a little bit every time. And some of these companies will, of course, just get acquired into larger institutions, and then people will bring their own learnings and innovations into those. And that's the cycle of startups that we've seen in every other platform shift before. So I think this is a good thing, even if temporarily a little painful for some.
Erica, what's interesting is we were just talking with Wabi, and they've got to deal with Uber, Airbnb, these companies that came into existence, disrupted, and stayed independent in the previous wave of move to mobile. Now we see these weird deals going on, acqui-hires, Inflection going into Microsoft, sort of relationships built between OpenAI and every other company. What sort of companies will end up existing, or will they be bought out or M&A and deals done with incumbents?
Sure. I mean, I don't have a crystal ball, and I think it's really important to call out that, we're still climbing the hype cycle. So there is a long time to come where we'll see a lot of evolution, just like we saw in the shift to mobile. You mentioned all these companies, and they all came several years after mobile phones and the smartphone really came out. So we're going to see the same thing, I think, with AI. We're going to, of course, see a ton of M&A. Of course, all eyes are also on regulators to see what's allowed to happen. And I think you take the case of Inflection and some of these other, I'll call them creative deal structures that probably had to be put in place because of fear of regulators. But the incumbents know that they need to harness this technology. They need to forge relationships with these up-and-comers in order to remain relevant over time. So yes, we're going to see some generational companies that are getting formed right now, just like we have in previous platform shifts. We're also going to see a lot of very interesting and exciting alliances between startups and incumbents come. We're going to see a lot of M&A to come as well. And I think, some of the greatest companies of the next 20 years haven't even been started getting built yet.
It's not even on the list that you bring us. Well, we thank you for doing the hard work, for finding some of those 100 hot ones already. Erica Brescia is Managing Director at Redpoint. We thank her. Everything app. We're back there, Elon Musk's X. Well, to do that, it needs to perhaps add payment networks into its social media platform. Now, according to a whole trove of documents submitted to state regulators, the company is looking perhaps to add Venmo-like payment features for use on X. For more, we're joined by Bloomberg's Aisha Counts, who went through some 350 pages of documents when it comes to emails related to money transmitter applications made in various states. And Aisha, what have we learned from how payments will be interweaved to X?
Yeah, as you mentioned, we went through a lot of documents. We talked to state regulators because one of the things X has to do in order to allow payments is actually be regulated in all 50 states. And so we found a whole host of things. We found out that Elon Musk owns 75% of X Holdings, the company that then owns 100% of X. We found out X's revenue over the last year. So they made about $1.48 billion in revenue, which is down 40% from the year before Musk bought Twitter. So details like that. And then, of course, more details on how they actually plan to implement the payments aspect and how that's going to feed into an Everything app.
So let's talk about the payments part in particular, Aisha, because look, that's his roots, right? That's where he first came from, one of the PayPal mafia, as he was known, and his first company was indeed called X. What does he envision us using payments for, and how on the platform?
I mean, he envisioned it just like Venmo, as I think you mentioned earlier. So if you think about being able to send money to friends and then being able to send that money back to your bank account, that might look like products and services that you buy through X. Maybe even in the future, it could be some of Musk's other companies. And then there's a vision of actually being able to use it in a way like Apple Pay, where you go into a physical store and you can buy goods. So it looks like all of those things together in one. And as you mentioned, that's so important for an Everything app. If I'm going to, buy a good or service or order food, or if I want to buy a product, I have to have a way to send money. And so it's really a linchpin of that plan to really be able to do everything in one place.
He needs the states to sign off on it, but he also needs partners. I assume they're not building this all from the ground up. I mean, they already have relationships with Adyen and other players in the field. What more do they need to build here?
I mean, absolutely. They need those partnerships. You can imagine they outline this in documents as well, that they might even look at partnering with other people beyond Adyen, like you mentioned, and then also Stripe. So maybe other payments processors, obviously banks. They're banking with Citibank right now. And then if they're going to sell goods and services, they might want to have partnerships with retailers and And they might even want to have conversations with advertisers. If advertisers want to put an ad for their product and someone can click on that ad and then go directly into the purchasing process. I mean, all those sorts of things are opportunities for them to develop more partnerships and really get more people buying goods and services and sending money.
Last 30 seconds. Crypto related?
No crypto, which is sort of surprising, and it might be because of some of the regulatory hurdles with that. You might have to go through some additional steps, but X told regulators that it has no plans to do crypto at this time, even though we know that Musk has been a huge fan of Dogecoin.
Oh, I have to hold out for a little while longer. Asia Counts, great piece of reporting, a whole trove of emails and documents. We appreciate you scraping through them. Meanwhile, I think that does it for this edition of Bloomberg Technology. Don't forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. From New York, this is Bloomberg Technology.